In this lesson, we will cover how to trade trading ranges using price action rules. Trading ranges are quite a common occurrence on charts, and it is paramount for us to understand how to navigate this structure accurately. Now, how do I recognize the trading range? Well, this is fairly simple. This black line divides yesterday's session from today's session. I can see flat exponential moving average supportive indicator, and I can see consistent series up and down through the EMA. So this is extremely easy, predictable trading range. So what I have to do, there are basically two main things that you need to keep in back of your mind. First of all, locate the key levels, because every single trading range is always bounded by two key levels. The key level at the bottom, support and resistance. And also when you're going to be following trend line rules, you have to make sure you're drawing the channels for the most part tighter. Okay, we're not looking for super broad channels because we expect for market to pivot upon reaching the key level at the bottom and key level at the top. So right now I can see market trending lower. Now we know that according to trading range rules in price action, we want to focus on buying low and selling high. I have a big bullish bar here. Can I go long? I cannot go long just yet. Why? Because I have a downtrend working lower. Only after this downtrend gets a break in new extreme, I can consider buying again. If this downtrend won't get a new extreme, but we will retrace the majority of this downtrend, then I would adapt and I would be looking to go long. Let's see what's going to happen. We have a close outside and market created new extreme. So this is good because right now we know that the downtrend played out and we are thinking about going long. However, I cannot really go long here. This is a failed breakout. I cannot go long here because this is an inside bar of this big bearish bar, and inside bars are not perfect what we want to see. We generally like better bars, but context wise, most breakouts according to range rules will fail. And if we're going to combine it with the trend line rule, downtrend working lower, break new extreme, there is a big chance that the market's going to continue back into trend range. So this is how we are navigating a trend range. Follow the trend line rule and keep in mind that most breakouts will fail. It is counterintuitive because you see this downtrend working lower and it looks like the market will break lower, but smart traders are buying at the bottom and selling at the top. So in a situation like this, we're waiting for some high low or failed second entry short that never formed. Market continue working here. I'm going to redraw. Short opportunity, we have a new high, first entry long. What am I expecting? I would like to see two-legged pullback, second entry long to the exponential moving average, because the uptrend is new high. We're closing outside of it. We're above EMA. So right now our target is this resistance, following the range rules. But there was no second entry long at the EMA. Everything is far from the EMA. So unfortunately, I cannot go long. Now we are touching the EMA, but we already have a break and a new extreme. And this is important because trend line rule played out. Now you may see and point out, okay, there is potential spike in a channel like this. Isn't this spike in a channel valid? Well, in trend ranges, especially in tight and small trend ranges, which this is what a trend range is, spike and channels are not as reliable because upon reaching the resistance, the selling pressure is going to be so strong that there is not going to be a retest to new extreme. So when I'm trading a tight trend range like this and healthy range, you can see consistent swings up and down. Trend range is nicely full. I'm generally thinking about breaking new high, and I'm thinking about selling if we break below EMA. Okay, we're breaking below EMA. This is a good sign. Now I'm going to redraw a short-term downtrend working lower. As you can see, we have micro double top, which resets the count, and I have a lower high right here. Problem is, this lower high is quite big. I cannot definitely sell below this bullish bar. A lower high didn't even trigger, so there is no entry. But preferably we would like to see failed second entry long. Now when the trend range is tight like this and small like this, it is definitely possible that the lower high is going to generate a strong push down because there is just not enough room in price action and movement to create a trap failed second entry long. But it didn't even trigger. It triggered on this bar right here, which I feel is a little bit more aggressive. So even though we expect for price action to go lower, our trend played out, resistance is holding, push below EMA, so lower high is definitely good setup context wise. It just didn't trigger properly. Now market is working lower like this. At first I'm treating this as overshoot, and what I'm going to do, I'm going to move my support a little bit lower because I can see it's getting consistent bounces a little bit lower. So you can see how predictable price action is if I just try to locate the key levels and follow the trend line rule. Now because I have possible overshoot, I'm expecting stronger bullish bounce. Let's see what's going to happen. But price action is not even correcting to the EMA, so it's not acting as overshoot, which means I'm gonna draw it wider. So there's a wider downtrend being in play as the main pattern. Once again, I cannot go long just yet because the downtrend is in play. It was a little bit confusing because we pushed quite strongly above, but we quickly turned down back below EMA like this. So once we turn down below EMA like this, it is starting to get pretty obvious that the target right now is to get the new extreme. We have a failed second entry long, but I cannot sell into the bottom of this trend range. I can't go long just yet because this downtrend needs to get new extreme, but I just cannot sell right into these lows. If you're thinking about selling because you want to see new low, you would need to see new high, first entry long, pullback, second entry long failure, somewhere around this area, so you have room to scalp out before reaching the important support. So this is pretty much waiting area for me. I cannot go short into these lows. At the same time, I cannot go long just yet. And market created new extreme. Okay, downtrend working lower, break new low, and more advanced trader can visually see it resembles broad to like a pullback. It is not fully measured move, but we're not going to get measured move because we're trading a trend range, which means there's not going to be enough momentum. And because downtrend played out, there's going to be influx of buyers, and the market once again, because most breakouts will fail, will most likely go higher. We don't know this, nothing is certain, but as traders we need to put odds on our side, and we're trading the probability game. So right now there is a higher chance that the market is going to continue working higher. So this is another failed breakout, so we can consider this as a first decent high probability setup for today, because downtrend played out, most breakouts according to range rules will fail, and because notice how far away from EMA, decent bullish bar, we're most likely going to continue pull back to the EMA at minimum, and we may reverse back into the trend range. I'm going to delete the measured move. You're not looking for a big downtrend like this because it is simply too broad in trend range structure. This was a healthy trend range. Market is working higher, getting rejected at the EMA, but it doesn't mean I'm going to change my analysis. The structure is still a trend range. We actually have a new low, first entry short pullback, second entry short failure, and also micro new high, first entry long, second entry long. So we have two small high probability setups in one. Now you're below EMA, but it's not that big of a deal in a trend range like this. Especially this was a healthy and tight trend range, low volume. So these healthy ranges are really predictable. We're most likely going to go higher. But because you're below EMA, I have to market more aggressive. Remember, when you're buying, your stop loss goes always one tick below the signal bar. It almost stopped you out, but because we keep our stop loss one tick below the signal bar, the trade would have survived and it would have ended up working higher. Now we see price action working higher, so at first I'm going to draw uptrend like this. I was also thinking about possible uptrend like this, but this feels way too broad for trend range, and also this was a consolidation, and this was really the area where the market started to go higher. This was really where the spike started. So because this channel feels super broad and this was really consolidation, this is where the market started to go higher, I'm going to draw a brand new channel for this singular leg right here. So right now we have bullish uptrend. Okay, we are once again above the middle of the trend range, so our target is the resistance according to range rules, buy low, sell high. I can also follow the trend line rule inside of this trend range. This is nice and clean uptrend. We have a new high first entry long, so it's going through my mind. I would like to see second entry long at the EMA. Can we get it? It would also be small little failed breakout. You can see a small congestion. Most breakouts will fail not only off the main trend ranges, but also off the tiny ones, off the congestions. Now this right here is the second entry long, but problem is the signal bar is ugly. So when I'm watching this, I was getting ready to go long, but signal bar ended bad, doji-ish with the bearish body, so I canceled my order. But notice what happened shortly after. We actually had double bar entry. We can use double bar entry if something is wrong with the initial signal bar and we still love the context and we still love the setup, which in this case, context is extremely clear. This uptrend is new high according to trendline rule. Downtrend played out with the break new low, resembles a visual two-legged pullback, and we also have failed breakout in addition to second entry long. So I have confluence of many reasons to go long. I like this setup mostly because the double bar entry, the high is very close to the high of the previous bar. Had this bullish bar close, let's say here, I wouldn't go long because it's way too far up. Our stop loss has to go one tick below the initial signal bar, but because this bar is extremely close to the high of the previous bar, which means I'm not really chasing the entry, I'm almost entering at the exact same place, I can afford to go long, and this is a decent second entry long. You can see how clear the context is. The uptrend is new high, we're at the EMA, we're at the key entry point, and our target is most likely the resistance again. So market created new high, I'm going to mark new extreme. Let's see what's going to happen. Right now I'm pausing my longs because uptrend played out with the break new extreme. Remember, in trend ranges, I'm not looking to draw wider channels just yet. Okay, we reverse all the way down. Was there a setup for us to go short? There wasn't, but you would be thinking about new high, first entry long, pullback, second entry long, failure. But there was no failed second entry long, market continues to go lower. So what I have to do, always redraw these channels because I never want to leave candles naked on the chart. Okay, can I go long? Downtrend is in play. And market reverse all the way up here. Okay, are you expecting new low for this downtrend? You are not. We retraced the entire day of this trend, and generally you don't expect new low. Let's say if you even retrace 60-70%. Here we really retraced a significant amount of the downtrend. So what I'm going to do, I'm going to redraw brand new uptrend again. Right now we have big bullish spike. I cannot sell, but once again, rules tell us that the breakout may fail, but I'm not thinking about breakout failing just yet because the uptrend is in play. So at this point, I'm just going to wait and see what the price action will do. I could consider second entry long for a new high, but I got to be careful because we may go back into trend range because most breakouts may fail. We have a break, almost new high, not fully. Now we're correcting lower. We have matching highs, first entry long, signal bar is bad. I cannot go long just yet. The downtrend is in play. Now we're below EMA, we're back above. Price action is starting to get congested. What if we're going to go back in the trend range? Hard to say. I don't think we can take breakout pullback just yet because there's a potential break and a new extreme already. This was a very healthy trend range, and when the trend range is very healthy, the chances of breakout failing are really high. So I'm just going to be really patient. Yeah, there's too much congestion, so I'm being really patient, not really buying, not selling. We're above EMA, I cannot sell. There is not a clear break in new high. Had there been clear break new high, you could have considered selling, picking some top, but not like this. Definitely cannot go long, everything is too congested. And the range rules once again kicked in. Perfect price action. We traded all the way down here. So this is how it's important to always keep the range rules in back of your mind when you're trading a structure like this. It is counterintuitive because it is always going to lure you to start buying when you see breakout to the upside or start selling when you see breakout to the downside. But you have to resist common sense and you have to follow price action rules. Now I'm going to widen the channel just a little bit because it really makes sense. We never even touched the EMA once. It still fits nicely at the top. Still looks like a visual one push down. Very controlled, very nice. I'm also going to move my support a little bit lower here. Now I definitely cannot go long. The downtrend is in play. I cannot sell far from the EMA, so I'm just waiting. Okay, I'm going to redraw a short-term uptrend. And price action attempted to create new extreme. So what I'm going to do, I'm going to mark new low, but we don't have new low fully. I can see that we have micro double bottom, which is tempting here to go long. But what if there's going to be the one additional push down to technical new low? It's very hard to predict, especially if this push down was so significant. Had we at least confirmed the EMA once, so it wouldn't be so strong bearish. But because we don't fully have new low just yet, you know, buying here is way more aggressive because we don't have new extreme just yet. So because you don't know if it's going to work or not, there's going to be additional push down. I have to mark it more aggressive. Now there was a high low, but high low is an inside bar again, which we don't like inside bars. Can we get some failed second entry short above EMA? We cannot. By the time we get it, it's way too far up here at the top of the move, far from the EMA. I cannot take it. It is way too late. So I'm going to redraw a short-term uptrend like this. Let's see what's going to happen. Right now, I was expecting second entry long at the EMA because the uptrend needs to get new high. But because EMA is breaking and it's not holding, I have to pause looking to go long just yet. We have downtrend working lower, so I'm going to redraw the short-term downtrend. I wasn't really sure if the downtrend is tight like this or a little bit wider, so when I'm not sure, I'm going to wait. That is a small break. Attempt to create new extreme. The support is holding. Let's see what's going to happen. Now we have high-low setup, but what is this high-low confirming? Nothing. This high-low is just in the middle of the trend range. We pushed above. It is at the very top of the move. It's not confirming anything. Just because it is a high-low doesn't mean I can't take it because it doesn't confirm anything. Bad context, there's no good key entry point, so I cannot go long just yet. Market continues to work higher. Let's see what's going to happen. As you can see, the market is getting very slow because right now we're in the middle of the trend range, indecision. We are not at the key entry point, so you gotta be really careful, but there is no setup anyway. Market continues to go higher and I just don't see any good setup, and now it's getting way too late. Well, there was actually quite momentum towards the close. So this is the overall structure for today. Very clear and healthy trading range. There was no imbalance. You can see every single time market reaches the key level at the bottom or at the top, there is a reaction. You always want to make sure you expect a breakout to fail, especially if a trend range is quite small and very healthy with consistent swings up and down, and you're looking for setups at the extremes. In the meantime, you're following the shortened trend line rule, because even if you expect for price action to bounce at the key level, you still expect to get new extreme and you still want to get a nice two-legged pullback for the current channel. So I hope you had a good trading day. I'm going to wrap it up. I'm going to talk to you next time. Good luck with your trading.